G'day traders, we're going to wrap up the markets for Tuesday the 29th of October. So here's the 1 minute chart here. We're going to come back to this. As usual, we're going to start off with some longer term charts and talk about some trading areas, support and resistance. But before doing that, I just want to bring across the daily chart. Now, I've mentioned this quite a few times within these market wrap-ups. I just want to really talk about why, again, just so we can sort of reiterate as to why these markets are quite tight, why we're having such a tight range and they're not really doing anything at the moment. And it's because we're making higher highs on the daily chart. So this is a daily chart. You can see it goes all the way back to May, so it represents quite a few months here. And the fact is, this time of the year is normally quite good trading. Okay, right up until mid-December, only really a week before Christmas, it's good trading, as in everyone's fairly present. They're not worried about the holidays until right at the end of the year. They're there, they're ready to trade. But the other indicating factor is that we're making higher highs. When we make higher highs, the market really starts to slow down because what happens is it takes away the battle or the fight between the buyers and the sellers. And what the market does is just tends to grind away slowly. Then all of a sudden you'll see some sort of sharp pullback and it'll start to head back and look to break some lows. But until it does that, we're going to have slow markets. So it's something that's been mentioned quite a few times, but just really want to mention it again, reiterate it, so you know that coming in today, it's not like you can sort of come in and expect all this movement and then be disappointed by the fact there's no movement. We started today, we talked about the fact that in the trading room, it's likely that we're going to be having a very tight range. We're going to look for opportunities, no doubt about that, but be aware that it might be a case where it's just going to be wait and see. Okay, and not expecting all these setups. Also when the market comes back and pulls off its highs, then we can start to look for some more setups. So that's just a little bit of background about how the finer details about the market and what actually makes it move. What gives it those better trading days compared to those slower trading days. And at the end of the day, it really comes back to the type of trader you are. It doesn't mean that you don't take trades in these type of markets. There's still going to be opportunities. I'll talk about some opportunities that we looked at, but we just got to be aware that it doesn't matter how many trades you take. You're going to be taking less trades in this type of market when the market's making higher highs. And as soon as it starts pulling back and definitely breaking down through some levels, we're going to see some more action, and then you can expect to be taking more trades as well. So that was the daily chart. Let's now bring up the 15-minute chart. We're always bringing up this, having a good sort of look at it, chat about it, leading into the opening of the markets, and then of course we're always referring back to it during the live markets as well. So here you can see we've got these blue lines. This is just representing the significant support and resistance, horizontal support and resistance areas in the market. It's just areas where the market respects and it's come down and and there's something there. You can see the market either bounce off it or break through it at least 3-4 times. Okay, some more significant areas would be, say, this one here. You can see it's definite sort of real high a couple of times, then all of a sudden the market breaks through, then almost to the tick, there's this distinct support as it bounces off that previous high to go higher. This is a major support resistance area in the market, and we're really looking for it to come back and try and break through it. That's when we'll see some better markets, some markets with some more width. Okay, but then in between that, we've got other support and resistance as well. So we've got this one up here, not as significant, but there's certainly something going on there. We topped out here. This is the high of this day, back last week. All of a sudden, it's a couple of times it's bounced off it, especially through here leading up to the opening of today. The pre-market just kept on bouncing off this area, so therefore, leading into the opening of this market, we marked in this as a support, major support and resistance area. The fact is, we haven't come down and touched it or try to use it, so we put it in the back of our mind. It's there if we need it, but the market didn't come there, so for now we don't worry about it. But if the market comes back, it's certainly an area we'll watch. At this stage, you can see we're pushing higher. We'll look to add more support and resistance areas. There could be something forming around about 62. There's a little bit going on. Obviously, there's a high here. It hasn't really respected the back through here, but if all of a sudden we see the market come back and say this pre-market bounce off it and try to head higher or do something around the 62 level, we'll be definitely marking this in and considering it as a support and resistance area. But for now, it's just a wait and see if we can add anything in there. For now, we're just really looking down here. It's just major support and resistance. So with that in mind here, we've got the 1 minute chart. So we've got that support resistance well down off the page. So something that we're not going to mark and worry about within today's session because we never got there. You can see straight up, I've got this box marked in white here. So what we call this is the pre-market box, and we just mark the most significant low and high point. So we've got a low point sort of back here, and we've got a high point which is here. And you can see it's just in the opening of the market there. What we do is we go up until 10 o'clock. Okay, 10 o'clock is the unofficial opening of the market. It's when all the economic news comes out. It's sort of that point in the market, even though it opened half an hour earlier at 9:30, but it's that point where most professional traders go, okay, 10 o'clock, this is where we really start to go from. Okay, so what we want to do is go, okay, where has the market been? Here's a significant high. Back then it was a significant low. Let's put a box around that and be aware of it. Why we're within those 2 points? It's sort of the market's range bound, within its highs, lows, so to speak. But if it starts getting out, which it does later on, which I'll talk about in a second, that's a real significance. It's showing trend, it's showing direction, and it's showing that side of the market is really starting to gain some momentum because it's gone up and gone higher than where that, or lower for that matter, than that significant area up until that 10 o'clock opening of the market. So we're always marking this in. I don't always put it in for the wrap-ups. Depends on how much is on the chart. I sort of don't want to bombard you with too much information, but we've certainly got it in the live trading rooms and making reference to it quite often. So you can see, this market's stuck within say 1, 2, 3, 4, 5 point range. As far as day trading is concerned, that's very small when you consider we're going for 2 to 3 points profit. We're talking about a very tight range here. You want to see sort of 6, 7 points minimum as far as a trend, and sort of be getting outside of an area at the moment. Just sort of it's bouncing between points and really showed no sign of going anywhere. Before we sort of get up to this point here, I just want to make reference to the other markets. We're always sort of referring to the other markets in these wrap-ups, and definitely within the live markets, the trading room, we're making reference to the other markets. We're using these other markets because they're related to the market we trade. They've got their slight differences, but they can certainly give us an indication of when the market's going to trend, or when the market's going to take off, and it can also give us an indication of when to stay away. And this is an example of this today. If you sort of look around here, as this market's trying to push higher and trying to push up here, you have a look over at other charts, especially the top left-hand corner. See the Russell? It's pushing lower, and what happens here is there's no sort of togetherness or continuity about these charts. You've got sort of one pushing lower, one pushing higher, and I'll even bring up the other one that we watched, the Dow Jones. It was breaking higher. Okay, so what's happened here is, someone's seeing this for the first time, like, oh, okay, well, there's no relationship between those other markets. Why would you use them? But the fact is there is, and quite often they're very closely related, and they're sort of doing the same thing and leading each other through different areas. But on this particular day, which happens very rarely, you'll see that the related markets doing completely opposite things. And what I'd say by that is, all that means is there's no real strong direction either side from the buyers and the sellers, and to be very wary. And it's sort of a real indication to sort of wait till those markets come together and start heading in the same direction, which quite often they will eventually do. But sometimes, and like I say, it's very rarely you get a day like this where one market's trying to break higher and you've got other markets trying to break lower within this USA markets. Okay, so because these markets are related, that's a bizarre thing to happen. There's certainly warning bells to say, just be careful and wait off and wait till you get that, that influence or that continuity between the other markets. So in saying that, eventually this market's pushed up and got outside this pre-market box, and this is sort of the first time that we started to see some sort of trend and direction, even though it was based on very low volume. Let me just bring up the volume. You can always just quickly add in the volume. You can see there it is there. So pretty good volume to start off with. You'll typically see it drop off through the day, but not so much like this. You see it really drop off here, and especially through here, just a tiny amount of volume. So just be careful trading with very low volume, because quite often the market will do sometimes erratic things, or sometimes just go nowhere. You want to see moves based on volume, and that sort of gives it more depth. So this particular case, there was a real lack of volume pretty much for the whole day, which is why we saw this real sideways market. But in saying that, the one time the market showed signs of doing something is when it started breaking outside this pre-market box. Like we said, the other markets were sort of doing an opposite thing, so I wouldn't be so confident in this area, but it's just an example of what happens and we quite often look for this in the trading room, is when this breaks out of this pre-market box. If it comes back and tests it, which is what it's done sort of here, comes back, breaks out here, comes back and tests it, quite often it's a good area to hold a support and then try to push higher. Okay, which is what it's done here. It's come, try to push higher, come back again, come back a little bit more, but eventually it's taken off from there. So we can see it's a bit like those support and resistance areas we talked about. If we get outside of the area, then all of a sudden this area that broke from becomes an area that should hold and push the market higher. Not always, but in most cases. So that's a wrap up for Tuesday. Like I say, very tight markets at the moment, but it doesn't mean that there's always something to learn. There's always potential opportunities. It's certainly not a time to stay away and have a holiday. Like we need to see all sorts of markets, be it slow, medium, or fast, and that's how you become a complete all-round type of trader. Because the fact is, there's no sort of one type of markets. There's always different types of markets, and you want to have experience in those. And then when it happens again, you're ready for it, and sort of got that experience behind you, which is going to make you a better trader. So we'll be back on Wednesday to do the wrap up again.